when you get to the six-figure level, I think it sends the message to people that Bitcoin is here to stay. I think there's been multiple stages of Bitcoin, right? There were the early years when it wasn't clear what it was or whether it would survive. Then there were the block size war years when there was the big fight over the identity of Bitcoin and what was Bitcoin and what wasn't Bitcoin. And then I think from 2020 to 2024, I would say those were the crazy years, but there was the big question was, is Bitcoin an institutional grade asset? Will it be embraced by governments, by corporations, by institutions, by traditional capital markets? And there was back and forth, and there was a lot of skepticism. And some people said it's too good to be true. Some people said it's so good they'll ban it. Some people said, well, there'll be a little bit, but it won't be much. And then there's a big fight over, is it a currency or is it capital? And I think that since November 5th, right, we've seen kind of a surge from like 68, 67, all the way through 100. I think the answer that's been questioned, the question that's been answered is Bitcoin here to stay? Is it an institutional grade asset? Will it be embraced by the wealth and the power of the world? And I think busting through 100,000 is a numeric punctuation to the emphatic answer to that question, which is yes.
Yeah. Can I ask you about the 21-21 plan, which was
Sure.
absolutely, you're absolutely right, earth-shaking in capital markets, I
Right.
think, and then proving the demand. In fact, so much demand that I think the latest convert that you guys did had a 0% interest rate, right?
Zero coupon, up 55 points, and we started looking to raise 1.75 billion, which is twice as big as our previous largest convert. We started twice as big, and it became $3 billion by the time we finished.
And you've already raised 13 out of the 42. That's 30% over 3 years, though. Aren't you ahead of schedule? Like, or what is your pacing going to look like, you think?
Yeah, we are ahead of schedule, but there are a lot of unknowns on October 30th. We weren't sure how enthusiastically the capital markets would embrace us. You've got the convertible investors. You've also got the equity investors. You've also got the options traders. So we have many, many constituencies. So we had to see how they would react. And that was a big thumbs up from all of them. Mm-hmm. And then we didn't really know the outcome of the election. And I really do think the red sweep on November 5th is probably the single most important thing that's happened, maybe to the entire crypto economy in the history of the economy. Mm-hmm. Okay, well, I think the most important point to make here is we're not really limited to the convertible bond market, right? Convertible bonds just happen to be one form of fixed income. We've experimented with all sorts of fixed income. We've tried asset-backed financing. We've tried senior debt. There's junk bonds. There's also preferred stock, and there are various flavors of that, and structured products. In October 30th, we laid out our Treasury strategy, and our Treasury strategy it looks like this. You've got a crypto commodity called Bitcoin, which is 60 ARR, 60 volatility. Okay, 60-60. Okay. The performance, the 60 ARR, that's a form of energy. And then the volatility is another form of energy. It's kind of like potential and kinetic energy, or you could think of it as you got a train moving 60 miles an hour and you got a flywheel spinning 60 RPM on the train, and that's your energy. Okay, so that's what's coming out of the crypto economy and the macro economy. There's a drive shaft, and that's being driven into the spot ETFs. And if you wrap it with IBIT or FBTC, you can buy 60-60, right, in the form of security, or you can buy 60-60 in the form of a commodity. MicroStrategy as an operating company, what we're doing is we're stepping that up and we're stepping that down, right? So some people want 15, what they want is 25% of the return of Bitcoin. And you would think, well, you're crazy. Well, they'd rather have 15 ARR, 5 vol, no risk, or be 10x over collateralized, right? Just give me 15%, but tell me there's a very, very small chance I don't get my principal back. Some people want 15. By the way, the entire S&P index is people buying 15.
Right.
Right. All you got to do is take 75% of Bitcoin away, and you can create 15, which is $100 trillion market right now. So one form of fixed income or one form of investors is to target that. You can target that in a fixed instrument where you're giving people a cash coupon, or you can target it in a structured instrument where you're giving them a capital gain over time, a convertible instrument. But you could just target 25% of Bitcoin and I'll give you 15, or maybe I'll give you 15 ARR 5 vol. And people would lose their minds, right? Because that's like 3x the Sharpe ratio of the S&P. So you can create that. You can create 30-30. You can basically I'm going to give you half Bitcoin. I'm going to take the other. I'm going to take half of the performance, and I'm going to take all the volatility away and half the performance, and I'll give you the other half. Do you want it as a coupon, or do you want it in a conversion? And then I can give you 75% of it. And then I can give you, so when we did that we did a convertible bond at 0 coupon up 55, but it's a 144A offering. So it's something you sell to qualified institutional buyers, but you can't sell it to retail, and it doesn't trade like on a 4-letter ticker.
Right.
So that's a market and a pool of capital. But there are all these other pools of capital, right? So if you sell something which is just the same performance as the S&P, but less risky, I mean, how big is that pool of capital?
Massive market.
Or I'll give you another idea. What if I gave you the performance of the ETFs with downside protection? What if I give you the upside of Bitcoin, but no downside?
That sounds pretty good.
Doesn't it?
Yeah.
That's what our bonds do. Our bonds are actually more than the performance. Like convertible bonds and MicroStrategy are more than the performance of Bitcoin. More than the performance of Bitcoin, but with the downside protection. They're a bond. And so if you think about that, the thing an operating company can do is we can strip the volatility, strip the performance, strip the risk. We can embed something, the senior 10% tranche of the capital structure, and we spit out one type of returns. But by the way, some people hate volatility, right? The mainstream normies.
Yeah, they do.
They hate it.
Yeah.
But if you go to Susquehanna and you said, we're going to strip the volatility from MicroStrategy, we wouldn't have $100 billion, $95 billion open interest. Do you know what happens when you strip the volatility from a company our size? I know, because I have another company that I started, and the other company is twice as big as MicroStrategy in revenue and twice as big in EBITDA, and it's well run, and it's just a great company. The open interest is $5 million.
Wow.
We're 98 billion as I'm speaking to you right now. So stripping the volatility out of the business is like spraying the fire with a fire extinguisher, or literally, you're not pouring gas on the flame, you're pouring water on the flame intentionally, right? Whereas what we're doing is pouring gasoline on the flame. If you ever study an internal combustion engine and look at how it works, the point is to channel and compress, turbocharge, turbocharge the fire.
And direct it.
Not put it out.
Right.
Right? So there's a big market, a $300 trillion market for, fixed income, coupon generating, principal protected, low volatility instruments. there's another massive market, $100 trillion market for equity like S&P, SPY, Vanguard 500, QQQ, that kind of, and something that gives you 15, just beat the S&P performance. And if you and if you do it with less vol or less risk, then why don't I just give you trillions of that? So there's that market. Then there's the Bitcoin market, which is, I want Bitcoin upside. And of course there's $100 billion now, I guess, in that market right now. But, at MicroStrategy, and then there's the convertible arbitragers, right? And the convertible arbitragers, they're like, I'm going to buy 50 million of your paper. I'm going to short 40 million or 35 million of your stock. And then as the stock moves around, I'm going to adjust the short.
Right.
And I'm extracting that premium risk-free. And that's their thing. And that's what they do. When I meet with them, by the way, I'm like, I see you guys every, few weeks or every quarter. Nice to see you again. By the way, that thing that you shorted tripled. Like my advice, what I say to them, they don't take my advice. No, it's okay. It's okay. Now everybody's got to do their thing. The short's got to be short. The long's got to be long. The trader's got to trade, right? The haters got to hate. The maxis are going to maxi. Everybody's going to do their thing. That's fine. But what I say to them is, this is like 75% Bitcoin upside. Actually, it's like 70% MicroStrategy upside. It's 100% Bitcoin upside, no downside. Like that is to say, if Bitcoin crashed 90% tomorrow, you're still getting paid. Bitcoin could go down 95% tomorrow and stay there for 5 years. You're still getting paid. It's like, why are you're already hedged. You're already 10x over collateralized. Why are you hedging it again?
Yeah, it's interesting.
Right? But there are some people that do they double hedge it. So there's a group of people that buy that convert and they just buy the convert, they're already hedged and they outperform Bitcoin without the risk. There's other people that, by the way, that's one type of view. There are other people, they don't want to take the risk for an hour. Like literally the afternoon they're buying the bond. When the stock's moving around, they're buying 50 million, shorting 40 million minute by minute. They don't even want to take an afternoon of risk.
Right.
But that's okay. So I think that it's a long-winded answer to your question, but we're just going to provide securities to every pool of capital. If what you want is that instrument, if we think it's good for our common stock shareholders, we'll sell it.